There is a ton of uncertainty going on. In the worst case scenario, from what we've been looking at, with a 25% tariff on Mexico, Canada, an additional 10% on China, it would have an impact on US growth, pushing it down by around just over 1.1%. That's not enough to plunge it into recession. But of course, the economic data in the last couple of weeks has been concerning. And one of the things that we are watching very closely is, of course, the deteriorating business sentiment, consumer sentiment, and what are the capex plans. So there are so many different dimensions to Trump 2.0 that it's becoming more and more difficult to analyse what the potential economic impact could be.
Seema, where do you think it impacts first? Again, the market has definitely, over the last 3 to 4 weeks, I would say, changed from worrying about inflation to actually hurting at consumer spending. And again, this capex could have longer-term impacts if chief executives just hold off spending.
Exactly, and I think that's one of the things is for tomorrow, let's say that it's delayed for another month. Of course, that's better than the worst-case scenario of the full tariffs being introduced. But it still means that there is that lack of uncertainty weighing on capex. So this is a fairly difficult period. I think, as you said, the sentiment has shifted. The focus has gone from potentially rate hikes to now more and more people saying, well, look, is recession on the horizon? We're not there yet. We still think that actually the fundamentals of the US economy is still very strong. Consumer balance sheets, corporate balance sheets, strong enough to withstand the various headwinds. But of course, there is the potential that this, continues to gain a lot of steam. And of course, we don't know what else is coming. And I think that's the key thing.